an investor, we should be looking at the monthly chart. Until we get a monthly lower low, we watch levels. That's all we've been talking about lately. So as long as we're over the previous monthly high at 492, or just about, I'm going to call it 10-point cushion, unless we fall below that, there are no warning signs, period, full stop. And before we get a monthly failed breakout and then a lower low, the lower low is only going to happen if we come all the way down here to 466. That's a long way from here. It's nearly 10% now. On the annual chart, we're bullish over 480. On the monthly chart, we're bullish over 492. So if we're over 492, as worried as you might be because we're in fear here, or if you're feeling really greedy, just be mindful of where we currently are. So the first warning sign that I would point to is going to be here on the weekly chart. And what I'm looking for here, the first pattern is going to be a failed breakout, which means that we make progress to the upside, but then fail to hold it. We can see that here with this week's candle where we poked to a new high, which means we got above 501.65, but now we're back below it, hovering roughly at 500 here. So that's the first sign. The same thing we talked about on the monthly chart. And remember, that's going to be 492. And then before we lose that monthly area, if we look here to our weekly low, it's at 490.23. If we print a weekly lower low, we're going to lose 490. And then we're going to be below the first warning sign or a monthly failed breakout.